How's it going, fellow trader? Magic Trader here. And this is the CFTC report for the data that was recorded on February 15, 2022. Here's a snapshot of the positions held by the institutions as of that date. Now, let's start by having a look at gold. What do we see here with gold? Lately, we see an increase in long positions, which is quite telling, I think, because we've also heard a lot that's happening in the news with regard to Ukraine and Russia, which is having a lot of speculators think that maybe they should get into gold because it's going to rally. And so you see a rally up in long positions since January 25th. Well, January 25th, we had 313,000. It dropped. And then from February 1st, it went from 275, 279. Now we're at 313,000. All right. So where do we go from here? And why is this taking place? Well, take a look at the short positions. Short positions, while this was increasing, they decreased from 103. Now we're up to 99 from 92. Let's take a look here. Weekly chart. We got a big push to the upside. Okay, now remember, we are ranging, and we have been ranging for quite some time. We have institutional supply here, and we have institutional demand here. As long as price sits within this range, we can't really tell which direction price is going to take. Now, yes, this is good that, we see them increasing longs, okay? But that's only brought price up to this area up here. Once it contacts supply, it's very easily can turn over and start heading back down again. All right. So I just want you to be aware of that, because as long as price sits within a range, we can't really tell exactly what to expect from price. Okay. So I'm not going to attempt to figure out what is going to happen because it's still in the range and there's no way to really know what to expect going forward. All right. So now let's take a look at oil. Oil, we see a big push up into supply. We've talked about this for quite some time. And now it's contacted the monthly area of supply. And we are seeing that reaction from that supply right now. Okay. Now, if we take a look at positions, what do we see? I told you that this area was going to be used by the banks to start taking profits. All right. And I told you that before there was any sign of that taking place. Okay. So I want you to see what is taking place here. 500,000, 492, 487, 480, 458. They've been consistently taking profits on long positions, okay? As you could see with the short positions, they're not doing a lot with shorts because that's not the focus right now. Right now, they're contacting major supply, and they're going to be focusing on taking profits of those positions, all right? It's going to take some time because they've accumulated a large long position, okay? But look at shorts, very cooled off. They've accumulated a large long position, so it's going to take some time for them to offload them. Over the longer period of time, we do suspect that price will sit sideways and then eventually spill over. All right, let's take a look at the dollar. The dollar has long positions at 42,000. It hasn't been doing much since December. We saw it a little bit somewhat aggressive, 46,000 and 42, 41, 43, 40, now 42. Nothing dramatic going on here, okay? But if you do look at the net positions, you can see that since January, they've been starting to decline, 39, 36, 34, 33, and so forth, okay? And once again, where is this taking place? It's taking place at an area of supply, okay? Now, what do we know to be true when price contacts area of supplies? There usually is a push to the downside, or those areas are used to close long positions. So we can see the exposure to the bullish exposure starting to dwindle, and it's happening right at that area of supply, okay? So we'll be watching this going forward and watching to see how the institutions want to play this one. Now we have the Aussie. And you can see that long positions have been cooled off for quite some time. And short positions have been the aggressive position out of the two. And so we've been tracking this one, the up and the down and the up and the down of price action. And what we can tell you is that this has been taking place at an institutional area of demand. I mean, we had a quick little spike through that area of demand on the monthly chart. Okay. But so far it's holding quite well. All right. So this move to the upside we see on the weekly chart. We were taking a look at the positions here. 98K small, 13 long. Okay. Taking profits on shorts, increasing shorts, taking profits on shorts, increasing shorts, taking profits on shorts. And we can see some of that profit taking place right now with the positions. Okay. Positions, if you take a look at shorts, you see that 120 down to 110 in the last set of data. So what's going to happen? Hard to say. It's going to move up. It's going to break the weekly descending trend line, and then it'll build momentum up from there. USCAD, not much going on here too. If you take a look at the positions, shorts, they didn't really do anything, and they added a little bit to their long positions. And that's while price was consolidating right here. Okay, so not much going on here. The currency markets have been not very responsive over the last multiple months. They've been doing a little bit of this and that, but nothing really strong, no aggressive moves, no major trends in play, which has been making it for a really, really tough market to trade. Okay. So we move on and take a look at the US. Look at that. Long and shorts. Do you see anything there? It's all cooled off. Both longs and shorts are both cooled off. There's nothing really to see here. Okay, the only thing that I can tell you is that if we look at the positions, big increase in shorts, big increase in longs, all right? So 90% long exposure went from 90% to 79% of the overall positions. And net positions just gone up a little bit bullish. We're still in the range though, okay? Weekly supply above, weekly demand above, below. Unless one of those break, there's really nothing to see, okay? Euro, pretty much the opposite of the dollar. We see a slight decrease in long positions, a slight decrease in short positions. And that's happening within the context of a range, again, on the monthly. And, on the weekly, we see some bullishness coming into play. And if we take a look at the positions, again, a big decrease in short positions, that's kind of leaning us towards a move to the upside. Take a look at net positions, okay? Went from negative to positive and just been building and building steadily throughout the weeks. And again, we've been bullish the euro for some time now. Ever since price came down to this area of demand and the dollar hit the supply, okay? Just logically, the next logical move is to see this one head up like that. Pound, same thing. Look at the long positions. Look what they've been doing here, okay? Increasing. They used to be very cooled off since contracts expired in December 14. Cooled off and just slightly increasing every single week, okay, to bullishness. Look at this. Okay, net positions very bearish, turning into bullish. All right, so it's in line with what we're seeing with the euro as well. Okay, trend lines invalid. Price can easily head higher from there. US dollar, Japanese yen. We have these positions here. A slight increase in longs from 74 to 76. A big decrease in shorts. Okay, big decrease in shorts. And very bullish, okay, when you look at the sentiment, very bullish, 88% long exposure. And net positions are bullish as well, all right? And we have been looking at this for some time, knowing that the bullishness was going to be there because of the areas of supply that the institutions removed. And so that opens up the floodgate for price to continue higher. But look what it's been doing. I mean, these are weeks. Every candle is a week. So you see what I'm talking about when I say the markets haven't been doing anything, giving us anything, all right? We got a nice trend here, but, price is just doing a bunch of nothing, all right? With the dollar weakness, we could suspect a little bit of downside pressure, but you see this and how well it's been holding up, so it could do just about anything. Last but not least, we got the Kiwi. Look at that. Big increase in long positions from 17 to 20,000. That makes long positions a little bit more aggressive now. You see the redness in here. But shorts are more intense than longs at this point. Okay. They're more intense, and also if you take a look at net positions, you can see that they're still bearish, right? There seems to be a little bit of a transformation, okay, from bullish to bearish and a little bit more. But if you take a look at the chart here, you know, demand is still holding. So with demand still holding, we can't assume price is going to drop, okay? Demand is still holding. So the euro's looking like it's ready for a rally, so does the pound. But the thing is that the Aussie and the Kiwi have been kind of doing their own thing for some time. So let's just be aware of that. All right, ladies and gents, that's it. Hope you enjoyed it. And if you need to reach us for more information on how we do our analysis, you can reach us at www.whiteoakfx.com. Thanks, and have yourself a great week. Take care.